Hey traders, this is Jack and welcome to the September 16th Friday video. This is a good time for me to give you my thoughts about going into next week, what I think about what happened on Tuesday, and kind of what to expect going into October, since now we are officially halfway through September. And there can be a very strong argument that we could be oversold from all the way back on Tuesday. And if you look at an RSI right here, I just have a basic RSI. It's fast. It's a 14-day RSI. It's just the basic default settings here. Pretty close to oversold, not shy of a second deviation move. That would be about 3812, 3800, and that is kind of what I'm expecting on Monday for that to happen. I don't know who wants to come in here and buy this the first thing after this week on Monday, but we do have some catalysts that are important to consider for next week and going into October, which is interest rate hikes, FOMC. We are getting past quad witching today, and we know that the put-call ratio has been very high. Everybody, their mother, their dog, has been short this market, and frankly, I just want to play the bounce. So do we get the chance to play the bounce? I think that might come on Monday if we have a little bit more of a dip down to about 3,800. Make everybody think this thing's going to fall apart one more time. And that might poise us, get us ready for a pretty substantial rip. And so what I've done to kind of prepare for that is say, okay, well, where is some key Fibonacci's, where are some key voodoo lines, and where were we trading most recently? Where's our volume profile? All these things kind of give me good information as to approach next week with a narrative, right? So all those things kind of coming in to play, I would say at the latest by Monday afternoon, whenever we sit down and we go, okay, are we at these lower volume profiles, which is, pardon me, go to here, go to this chart. Are we at 3,800, which would be the kind of the max area of this volume profile? That would be the July highs. We've already taken those out. We got to go back to the June lows, and that would be your 3,750, 3,600 kind of area, but not expecting that to happen just yet, even though I wouldn't be surprised if we came down one more time to 3820, 3800, and then we did a rip. So you can't really see it, but I have some very faint red lines right here. This last big one was just kind of a last example of if we were to retrace 50% from this candle wick, the 2 days that we had that were pretty significant. One, we just had those. That was Tuesday this week. And then the other one that was really bad, giant flush. At a minimum, it was, a 200-point move back in the late part of August. If we were to retrace 50% of the most recent one, that comes in at 3950. The August, I may have said July earlier, the August 50% retracement is 4,029. So I think there's a lot more upside here, especially, I'm very much an outlier type trader, so I try to buy or sell second deviations. And this right here just kind of goes, okay, well, all this in one situation with the put call ratio being so high, I think a rebound and a little bit of a short squeeze rally going into October just makes a lot of sense. My first target conservatively would be 3950. That'd be like, we're on the right track. The second one would be 4029. My overall upside target, we could say going into October, but honestly, I'd kind of like to give myself a little bit more time with this, maybe 21 days. So the first week of October, trading that higher to do that 50% retracement of this wick, which falls at 4029. And then if we were to take that out, There's sure is a lot of levels right here, but I'm getting to a point here. It's basically 4,100. And that would be kind of the next shortable situation. So it's a lot of wait on Monday to see what happens in the morning in the overnight futures. We might do one more flush just to go back down to 3,800 and then rip. We might have to wait for that because we have, interest rate hikes and things like that on Wednesday. So if you're doing a SPX deep in the money put credit spread into next Friday, 39.50 and 39.70, like a $20 wide put credit spread, that just makes sense to me. You can do those in a very cheap form. You can do a thinner spread, keep your credit and your risk to reward ratio, keep your debits down, so risk a little bit less money. But if you want to do a wide one, that's okay too. But these are my thoughts. These are just kind of how I'm looking at things. You'll know that I was going to tell you a little bit about gold. I'm certainly ready to see this kind of form another bottom here, and you have a double bottom from July that we have formed, and third ATR, I typically want to be buying something in gold, but hurry up and wait for Monday to see if this does flush one more time, and then I think I guess I'm putting it this way, but for me it's going to be a buyer's market. Little bit oversold conditions, basically oversold on gold, high put call ratio, let's create another air bubble. And if that air bubble needs to go up to about 4,100 post quad witching, post FOMC, that's fine. We'll be kind of expecting it. Okay. All right, so we'll see you on Monday morning. Have a great weekend, and we'll see if this all starts to pan out. And we'll know what to do if things look a little different. Like if we gap up on Monday, maybe we just kind of see what happens in the afternoon. Certainly don't want to get stuck in any traps, which is something that I try to identify as much as possible in my sessions. So if you're interested in that, come check it out in the futures room and the day trading room, and we'll try to make sense of this monstrous market heading into October and going into next week's FOMC. Thanks for watching this video. If you've enjoyed the video, be sure to like and comment down below to help us out. Also, be sure to subscribe and click the bell icon so you can get notified when we release our next video. And if you want to watch us trade in real time using our own money, go to simplertrading.com to learn how to sign up. Good trading, and we'll see you in the next video.